We actually have a good question about '08, for example. We have Dirty Wizard saying in 2008, the financial crisis, the bankers knew that the system will collapse. It was illegal, and yet none of the involved bankers went to jail. What if this happens for GME, if they try to do something shady?
Well, people go to jail. Probably not as many as should. I'll be honest with you. Probably not as many as should. It's lawyers protecting lawyers, man. That's how the 1% works. As sad as that is to say, money can get you out of or into anything that you freaking think it can. Everybody's got a price target. It's insane. It's lawyers protecting lawyers. What I will tell you is when it does get brought to the limelight, whether or not they get brought to jail, justice will be served to the people who deserve the money. Right. We, as the retail investor, the 99%, have done absolutely nothing wrong. We've done nothing wrong. The people who hold IOUs right now don't even know it. They just show up as tangible shares in our account. And when they get replaced, when that gets cracked down on, you've got the FTDs that get covered. You've got the IOUs that get covered. The share recount, right? All that stuff. None of that falls back on us. We didn't know that we had 100 million shares sold short into the market that we bought, right? That were actually not tangible shares. None of us can see that, right? They're the ones that are going to get pissed on, not us. I see no way we don't come out on top.
So we come out on top, and now we need to understand the people that are not going to come out on top. So let's talk about what is illegal and what is illegal. So according to this Citadel Has No Clothes document, this activity, if proven guilty, is illegal, willful naked shorting. So now let's talk about some other illegal activities. Do you believe in short ladder attacks?
Yes, 100%. Okay. And it's not legal. It is not legal. So what a short ladder attack is, if you don't know, you've got two entities. You could have two hedge funds, hedgy A, hedgy B. And they will buy and sell back to each other in incremental algorithmic amounts in order to drive a stock price's action down to the freaking dirt. And I think if you want an example of how that happened, look back on Wednesday, right? We had a flash crash, a terrible flash crash, where we went from $12.12 down to $9.50 in a matter of 25 minutes. 25 minutes. That's not natural price action. That is not retail investors selling out of the stock. In fact, you look at AMC and GameStop during that half-hour period of time, GameStop got halted 4 or 5 times. AMC got halted 2 times from what I know, right? And you're not allowed to trade during those halts. However, as if you read that DD, they can do that. And it's not legal, but they do it. These hedge funds will do that. They will still sell short into the market and ladder down the stock back and forth, back and forth, back and forth to $9.50, or if you're GameStop, $180 and change, or whatever that ended up being. 100%. I do think that's legitimate. In fact, I've got videos that talk about it way back a month and a half ago. I can't believe we've been covering it for that long, but yes.
Well, okay.
Long answer, yes.
So that's a short ladder attack. Well, what is a short attack, and is that legal?
Short attacks is muddy. That can be legal. It can be legal, but they're a little bit different. So a short ladder attack is the algorithmic buying and selling back and forth to each other. It would be in increments of a couple hundred shares to a couple thousand shares. It would just appear on level 2s, which is, real live price action in terms of who's buying and selling. It would just appear that you have a bunch of retail investors selling out at the same time. A short attack, however, it could be something like a huge dump of a couple million shares, which you don't see happen very often. And it doesn't have to include 2 entities. It could just be one hedge fund that's incrementally shorting, all right, cover back up, or they short over and over and over and over, down, 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 and down. And they maybe lose a little bit of money on that short down. However, it shakes some hands out of the stock, and sometimes they come out profitable on that. I think they're kind of one and the same, but that short ladder attack usually involves more than one hedge fund or one entity.
Okay, and then we're almost reaching the end of like risky business and just bad actor business. But we have seen several theories about purposefully putting GME and AMC on the SSR list. Is that legal?
Probably not. I'd have to look into that. I don't think AMC got put on the SSR list. It got dragged just below triggering that SSR. It was like 9.54% or something. Right. So to trigger the short sale rule, the SSR, you need to drop 10% below the previous day's close. So if you close the previous day at $10, you need to hit at least $9 intraday, which would trigger the breaker for that short sale rule. And then the rest of the day, you can only short on the upticks. And then the next following day, the same rule would apply. So for GameStop, that did happen. They did trigger that short sale rule. I think it was like a 40% swing in a matter of a half hour or something like that. AMC, they just missed it. But I think GameStop was intentional. And I think AMC, I think it was the same hedge funds that did this. I mean, it happened at the exact same time, so it's hard not to believe that anyways, right? I'm curious, and I want to know the reasoning behind why GameStop got triggered, but AMC didn't. I don't think that was by accident. I don't know what the reason would be. Maybe they want, GameStop to squeeze before AMC. Maybe they're trying to it's interesting. What do you think, man?
I think that, well, if there's no law against it, then it's not illegal. So this SSR list, for more context, is to protect the wounded elephant from being piled on by a bunch of hungry hyenas. Right?
Dogpiled, man.
Dogpiling them. So we are looking at specifically a stock that is on its last legs, or perhaps is in a moment of vulnerability, and the investors that are already inside needs a bit of security. So when the price drops a certain amount, then the predatory act of shorting, because in essence shorting is predatory, it is not allowed for a certain amount of time. However, putting it on that list seems to only affect it in one of two ways. Either it forces it to trade sideways for the next day and a half, and two, makes it so that it is protected from these other predatory actions. So by putting it on the SSR list doesn't seem like it's immediately illegal, but it definitely does seem sus, which is why we have to ask ourselves, who are these whales that are trying to get in, and what exactly is going on? Speaking of those whales, we have the theories that the dip on Wednesday was specifically so that call options can be piled on by these friendly whales who are trying to screw over the original hedge funds that shorted the stock. Is that illegal?
Selling? Is it illegal?
So,
is it illegal? Well, that's market manipulation, and market manipulation is illegal. Yes.
Right.
However, it's a strategy that makes sense because call options mirror the market, right? So call options get cheaper as the stock price goes down. If you swing from $12 all the way down to $9.50 and you purchase, let's say, a $10 call option, well, you recovered from $9.50 up to $11 in the next 10 minutes. So they would be in the money immediately on those call options. They would have got them extremely cheap. They could have sold them within that 10-minute swing if they wanted to, honestly,
right,
and come out on top and then done the same thing down the road, or then purchase actual physical tangible shares or more, far out the money call options with a farther out expiration date. There's a million ways they could play that off, but the strategy makes 100% sense because as we all know, call options mirror, and so do put options. They mirror the price action of the market. And it's a crazy way to leverage and to drive price action. So I think it's legitimate, yeah. And as we know by that Citadel, spreadsheet, that we know that hedge funds are using options to leverage their positions. So that's a huge strategy and I think it's a great hypothesis, man, for sure.
And now that we have gotten let's get some scissors in the chat and in the comment section for Trades right now hanging out with us on a Sunday.
We're chilling, man.
We're having some fun. We're having some chill time talking about who's going to jail. So finally, let's talk about who are the people that will possibly go to jail or avoid jail time. Who are the people that are likely responsible? Are the people that built the algorithms going to jail for the short ladder attacks? Are the people who are doing the short attacks going to jail? Who exactly is going to be behind bars?
There's a lot. So the thing about short ladder attacks and these kind of illegal malpractices that take place in the market is, in order for them to happen, there's a lot of collusion that needs to take place. It's not so simple that you have a hedge fund that says, okay, I'm going to manipulate the market right now. In and of themselves, hedge funds cannot just say, hey, I'm going to dump 100,000 shares, or I'm going to take these, my hedge fund or this guy's hedge fund, the short ladder attack. I'm going to drive the price down. I'm going to flash crash the stock, right? There's a lot of other things that need to happen. First off, they need to have the lended shares, which means that they have to talk to a clearinghouse or a broker to get lended those shares. So at the very least, you've got two entities that have to work together to make that happen. And at the very least, I think the hedge funds will be held responsible, but brokers and clearinghouses that know these are taking place, I mean, it's guilt by association, essentially. I mean, if they know that kind of thing is happening and they don't say anything, lawyers protecting lawyers, as we mentioned before, you've got kind of a double sword here. I think at the very least, you've got Citadel and Melvin Capital, both of which have, if they were lying on those congressional hearings, if they were lying about covering their positions, right off the bat, that's already a huge red flag, right? And then you've got the crap ton of I would say tangible, realizable short positions and manipulation that's been taking place on AMC and GameStop that people can throw some DD on and catch numbers on and show you, hey, you guys are doing some bad things. Citadel and Melvin, I think, are the two big ones that are going to be held reliable for sure.
Well, there you go. There are going to be people held liable, and specifically lying under oath.
Liable, yeah, not reliable.
They're not reliable at all.
Smooth brain 8, man.
They're going to be held liable. They're going to maybe avoid jail time because it happened in 08. It might happen again. But at the very least, people who have been shouting for, the CEO of Robinhood, the CEO of Melvin, the CEO of Citadel. Exactly how are these people going to be held responsible? Let's see on the congressional hearing on the 17th.